Welcome to Beyond the Press Release, a production of AGORACOM, in which we take the time to speak with small cap executives after they put up big news. With us today, happy to have him again because we just had him on in August. Brent Suen, President, Executive Chairman at Logiq Inc., trades on the NEO in Canada, and that just started on June 21st under the stock symbol LGIQ. And in the US, where they first started on the OTCQX, that's the highest of the OTC marketplace, also on the stock symbol LGIQ. For those of you new to the story, here's what you need to know. I love the description because it plays into our model. Logiq is the AGORACOM of the e-commerce world. So just like AGORACOM helps small mid-cap companies win the attention of investors, Logiq helps small and medium businesses win the attention of customers who are competing against mega brands in e-commerce. And that's where the story really begins, because on the great side, global e-commerce surpassed $9 trillion in 2019. But mega brands control almost 70% of that in the US market, which makes it really hard for small and medium business to compete. Logiq, that's where they come in. They're an award-winning e-commerce and fintech solutions company addressing that specific problem by helping drive e-commerce for small and medium businesses around the world. And that just does lip service. $37.9 million in 2020 from 2 divisions. And that's what we're talking about. That's going to be the crux of today's press release. AppLogiq is one of those divisions. It's a mobile app development platform that literally enables hundreds of thousands of small, medium businesses to create their own mobile app without any technical expertise. That's a massive help to that industry, because a lot of them just don't have the expertise or the budgets, right? And that's primarily offered in Southeast Asia, where it's dominating. The other division is PayLogiq. That's an end-to-end e-commerce marketing solution company. It's got advertising, marketing, and it integrates artificial intelligence to help small, medium businesses in need of online marketing solutions. Today's press release, Logiq initiates major restructuring designed to expand the PayLogiq side and unlock value on the AppLogiq side. Brent, welcome back. Let's talk about this.
Thanks, George. Good to be back.
So in the press release, there are a couple of quotes. Here's the first excerpt I want to start this off with. The company is forecasting strong growth ahead, driven by both strategic M&A that will accelerate growth in the PayLogiq business and the strategic spinoff of the AppLogiq business. So without going into details yet, take us through the logic there. You want to do M&A heavily on PayLogiq, and you want to spin out AppLogiq into its own entity. What's the overriding principle there?
Sure. So, and this is something we've actually been talking about for some time, and certainly working on. The whole idea behind a spin out of the AppLogiq business is because we do focus on emerging markets. And that's because the mobile device is prevalent over desktop and laptops there. Right. So what we're seeing in the market, and what we've certainly seen over the past, call it 5 years, are some very compelling valuations that help fund businesses that operate in these markets. Southeast Asia is a major region of emerging markets investment and opportunity. And so for us, it's clear that as a standalone of that business, the valuation should reflect similar valuations in the group.
And there's a quote in here to support that, where it says, combined with the presence of PayLogiq and GoLoiq in Indonesia, we believe AppLogiq is now ready to stand on its own. It would be and if it did, it would be in a better position to attract the right growth capital, along with investors who appreciate the vast opportunities and joys in today's emerging markets. Let's talk about some of those valuations that are driving this. It looks like this intention and probably decision to spin out AppLogiq. What kind of valuations are you seeing out there? And should I bring up that comp table? Is that what we should bring up?
Certainly, yes. There's one in particular on there that I think is relevant. And what's interesting about it, it's the company is C Limited, SEA, and they're on the New York Stock Exchange.
Right here.
Up until a few months ago, George, they were the only U.S. listed tech company out of Southeast Asia. What we've seen in the past 2 months have been 3 announcements, one between Grab Holdings and Altimeter Growth, which is a U.S. listed SPAC. It's a $45 billion transaction, billion with a B. FinXL, a Southeast Asia-based fintech company, is merging with Victory Park Capital, a U.S. listed SPAC, in a $2.5 billion merger. And then there's between 50 to 60 ongoing discussions between Southeast Asian tech companies and U.S. listed SPACs and investment banks for actual IPOs. And these investment banks are generally tier one. So Goldman Sachs, Morgan Stanley, Merrill, they are looking at multi-billion-dollar IPO transactions. So there's a lot of activity in the region. Valuations are healthy and comparable to what U.S. listed tech companies are seeing. So it's really exciting for us.
And SEA Limited here, if I'm reading correct, you can see the screen, right, Brett?
Yes, sir.
What's interesting there is that they're being valued at a multiple of 25 times revenue. Versus Logiq being the entire operation being valued at 2.3 times revenue. So do you think by that is that where you believe that by spinning out AppLogiq into its own standalone, because it dominates, it's so big in Southeast Asia, that you can get somewhere in between 25x and 2.3x just for that as a standalone?
I believe so. I think that with the business being a very clear-cut investment, either for, call it private equity or a strategic investor, we should see valuations that better reflect the opportunities that are occurring in Southeast Asia and certainly emerging markets.
All right. So you're definitely making a great case for it. So if that's the case, how would that spin out look? I know it might be too early because we know spin outs can take various forms, but do you have any sense for what that spin out would look like? Maybe what percentage current Logiq investors would still keep of AppLogiq because obviously being spun out?
Sure. Again, we have been working on this for some time, so it was not developed over the weekend and then announced by any stretch. What we're seeing in terms of valuations, and we've had third party valuation analyses done. We believe the value should land somewhere between 40 to 100 million just for those business units going in on their own. When I take the lower end of the range, I would say that going into a public vehicle, you always want to go in at a discount to market because you want to add some upside to new investors. Now, the high side is also, it's not a stretch because that would be based around peer valuations. And whether that's a multiple of revenues like C Limited trades at, or a multiple of gross transaction volume, which our business units are currently generating, or other factors such as IP combined with footprint, combined with number of subscribers. There are multiple ways to value it, but I think, again, we land somewhere in between 40 to 100 million just for that.
And to put that in perspective, you got about $80 million valuation right now for the entire company.
That's correct. That's correct. The other thing I would say is that by announcing this, we've literally put a stake in the ground. We intend to get this done very quickly. So I would encourage our audience to look for any type of announcement that indicates that we are being advised on either a sale of the company, spinoff into another publicly listed company, merger and acquisitions of either public company or privately held companies, and then taking that public. So there's a few different alternatives.
Last question on the potential spin out, and it looks like that's really moving ahead because you didn't just put it together over a weekend over a cup of coffee. If the decision was to magically be made right now, this second, what would be the ETA for the spin out actually taking place and being officially done? Is that a relatively fast process? Is it a couple months? Is it 6 months? What does that look like so investors get an idea of what to expect?
It can be done quickly. I think in terms of a timeline and milestones, the first would be to sign a definitive agreement. The second would be to outline a close of that. And then third would be a record date for shareholders of Logiq to receive their, be shareholders of record in order to receive their shares of the spin out.
So
I've seen it done.
Go ahead.
I've seen it done in as short of periods of time as 2 to 3 months. My personal preference and my team is in agreement here, as is the board, is to get it done within that time frame. So it's moving very quickly.
So if all things are going, if this is moving along as fast as I think it may be moving along, and again, you haven't given us any kind of definitive dates. Here we are at the end of September. This could potentially be wrapped up before calendar year end.
Correct. That's the goal.
All right. That's exciting. So everyone's going to be watching out for, watch the headlines, watch the wires for any update on the spin out or any kind of transaction for AppLogiq. On the DataLogiq side, you want to add more M&A and beef up DataLogiq. And by the way, you've had success with that already, because over the past year, you've acquired and integrated 3 leading e-commerce platforms to make DataLogiq become an e-commerce industry leader. And now it seems like you guys are turbocharging that. And I'm getting a quote, and here's a quote from Tom Furukawa, the CEO, who said, "There are a large number of peers operating in our industry that are privately held, generating solid revenue, operating profit, and even net income that could be acquired for compelling valuations, while at the same time offering accretive revenue growth, margins, and earnings potential." How aggressive do you think you've already put 3 into DataLogiq and you've done really well? How aggressive are you guys looking to be? Can we look at that kind of pace continuing?
I would say, from a practical perspective, and don't take this the wrong way, that was actually not that aggressive.
I thought it is in my books, but you guys operate a different timeline.
Yeah, I say that not being overly confident and with no hubris in there. That was more of a measured approach, primarily because we were developing a strategic roadmap for our positioning, and that's why those 3 companies that we acquired, Push Interactive, Fixel AI, and then Rebel AI, led to the roadmap of our current strategy going forward. And I feel as if it was very well planned and very well thought out. And we did that over the course of 18 months. Now, during that time frame, we have also grown that first acquisition of Push significantly. Our team has done a tremendous job. When we first met them, they were tracking at about $300,000 per month in revenues. As of last quarter, it was close to $2 million per quarter. So they've done a great job in growing that. The other 2, Fixel and Rebel, were predominantly, they were tech and IP based. Now, during the course of this acquisition endeavor with those 3, we have met a number of groups that run the gamut, from VCs with portfolio companies in the space to deal brokers, sell-side representatives at investment banks, all the way to strategic partners, and then somewhat of a pipeline of candidates. So what that does is it enables us to move a lot faster, because we have a very deep pipeline of potential targets, and that grows every day because we still do a significant outreach. Parameters we look at, instead of IP and tech based, we're looking at accretive revenues and earnings profitability, and then economies of scale and centralization of things such as finance, such as centralized sales, if applicable, marketing. So I think that this could have a very aggressive look and feel to it, which would be surprising to most, and would.
Wow, and you're saying that 3 acquisitions isn't very aggressive. So if you're saying your M&A path going forward could actually have an aggressive feel to it, that in my book says, okay, you're going to at least double that to 6. Well, and I'm just anecdotally speaking, like we're jawboning here, but
sure.
That's what it sounds like to me. And I'm not.
Yeah, well, to put it in perspective, we've been looking at an average of 7 companies a day, and we've been having discussions with 2 to 3. So it's, being aggressive in this is really just a function of things that are coming into us that we're looking at that fit our strategy, and being able to respond to the ones we really like. So it's going to move fast, just because that's where we're currently positioned.
Devil's advocate, Brent, can you be accused, or can shareholders be cautious of you absorbing and ingesting too much on the M&A side? Because every organization does have its limits. You've got to absorb, you got to bring in people, you've got to slash duplicity and things like that. How confident are you guys that you can grow through M&A pretty quickly without getting overwhelmed and just tripping over yourselves?
That's a great question, and although it's somewhat of a longer and complex answer, I'll just try to make it a little more brief. And I think I might have mentioned this on our first call. The average age of our senior team is in our late 40s. I'm a little beyond that, but I bring that up because what you want to see with any organization in growth mode is a tenure in markets, not just tech, but finance, economic cycles. Look at what we went through with COVID. You want to have a core team that understands how to operate in excellent environments, in really poor environments, in all the way, and navigate all the way through those cycles, because they always occur. And so, as part of our average tenure of around 20 plus years in various industry, we've all seen various tech cycles. We've all learned that the market cap is not always there. The funding is not always there. The investor attention is not always there. So being able to intelligently scale is there.
Yeah, you guys can, someone with 20 years experience can eyeball GeorgeCom technology and have a pretty good feel for what it's going to take to incorporate it, and whether it's an appetizer or a T-bone steak, and that experience pays off. Because if you think everything's an appetizer and you end up absorbing 3 T-bone steaks, you don't have any room, and then you're really in trouble. So I want to ask that because, look, I always want to make sure all these interviews are real discovery vehicles for investors, not just raw, right? And I think that's an important one. And here's the other devil's advocate question I'm going to ask you. And I'm going to preface it with this first. Being undervalued doesn't mean you don't have the right mix, you don't have the right company. Because remember, I'm saying this for everybody at home now, Warren Buffett created the greatest fortune in history up until recently with tech. From specifically finding undervalued companies that the market just mispriced, buying them, accumulating them, holding them, and then making vast amounts of money. So where do you think the disconnect comes in right now with the fact that Logiq is trading at 2.3 times revenue when your peers on average are trading about 10 times that, about 25 times revenue? Is that just a function of you still got to scale a little bit more or do you got to get to a bigger exchange to finally get that recognition? Because eventually value does come, proper pricing does come. But where do you think the disconnect might be right now?
I actually know exactly where it comes from, and not by some personal stroke of brilliance, but more from last year's experience of talking to professional investors, institutional and certainly research analysts at sell-side firms. A big part of it was being listed only on the OTCQX. Not having an exchange listing made a big difference. That also led into absolute market cap. So going public on the NEO was a big step. The other part is that our historical profit margins were in the low to mid-teens. And although that doesn't mean a tremendous amount to an average investor, most institutional investors will look at your profile and say, okay, if your peer group is trading at a very high multiple, what do their gross margins look like? And so on the comparative valuation slide that you showed earlier, yes, those companies trade at 23x revenues. I would say that on the low end, their gross profit margins are around 30%. So we did not meet that last year. If you look at the past 3 quarters of announced results, you'll see that our gross profit margins tracked upwards from the mid-teens to where we're currently at 30%. So we're just entering that realm. So going forward, I think we present a compelling story as we expand the audience and on venues such as yours, which are extraordinarily important to us.
So margin growth is probably more important to valuation than your revenue growth. Not by a lot, because revenue growth is important, but showing the market that you can maintain those probably 30% margins is that critical, huh?
It absolutely is.
So will it require, you guys did that in Q2 of this year. Is that where does the market, the institutions, the big professional investors want to see you do that for another couple of quarters and make sure it's firmly entrenched in your business model?
I think if you go back to Q3 and 4 of last year, Q1 and 2 of this year, you'll see an absolute track upwards. I think that anyone taking a look at us, whether it's individual investors or institutional investors, they'll see that tracking upwards and will appreciate the work that went into it. Layering in accretive acquisitions and as well as our organic growth and improving those even further, I think is going to be very, very doable. Not only because we've just done it, but also when you talk about economies of scale of similar companies to us, bringing them in and centralizing a number of functions will certainly lead to further expansion of said multiples.
Well, look, I'm glad you answered that, because what it shows is that you know where the disconnect in valuation comes from. You've identified it, and instead of arguing it, you guys have already taken corrective measures to fix that. And that's great news for current shareholders or investors who are just discovering the company right now. Last question. You have talked about in the past uplisting from the OTCQX to a more senior exchange in the US. How is that looking now, especially given this announcement? Is that still something that's a high priority for the company?
Yes, it's absolutely a high priority. And again, we did state publicly that we are intent on moving towards an uplisting to a senior exchange. What the exchanges would like to see and what they've been prioritizing in terms of uplistings is to see a simultaneous financing by an investment bank. Right. And tying that to the timing. And so what our audience here,
by the way, we've seen that for other companies where they had to do like a $10 million raise.
That's right.
Just to show that the investment community has confidence in the listings, putting their money where their mouth is.
Correct. So I think what the audience would want to look for is an S3 filing. Or for a shelf offering, and then an announcement of an investment bank being engaged. So when that happens, I think that'll kick things off for the application process. But we meet all the criteria otherwise.
That's what I love about these interviews, right? We're able to talk about so much more context and understanding of how the process works beyond just what you put in the text of a press release.
You're right. It's helpful because there's context for individual investors. There's not a lot of it out there. it's getting better, but I think it's very important for individual investors to feel very comfortable in what they invest in.
Yeah, and that's why we're doing this. So look, great news, Brent. Love the fact that you guys are moving full steam, and you got, what I really like is you got a rock solid plan. AppLogiq, we want to spin that out, and there's a reason why valuations, Southeast Asian Southeast Asian tech companies, especially, that are getting better valuations. Love that. And I love how you also have a very specific plan for DataLogiq, which is to speed up this, three acquisitions in a year. Geez, you got to speed that up, right? All kidding aside, I thought that was fast, and you're saying that was slow, which is pretty incredible. So I love the fact that on the DataLogiq side, you've got a lot of peers out there, a lot of candidates, and it looks like you're going to supercharge that as well. So we'll be watching the wires, right? Everyone home, watch the wires, watch for S3 filings, because there's definitely a lot more going out. I think after this interview, I can pretty much conclude that this is this press release is the "I told you so" moment. Like, hey, we're telegraphing what we're doing. We're not just spitballing. We didn't think about it, like you said, over the weekend, decided to put out a press release. So that's great, because it means we're going to have you back on a lot. And great to see the planning. Last words to you, Brent. What do you want the shareholders to know, especially the patient shareholders who believe in you, and they're just waiting for that proper valuation and the growth to kick in even more? What's your message to everybody at home?
The fact that we press released a very major restructuring. This puts a stake in the ground for us to move things ahead. And as I've stated here, we intend to do so aggressively. We intend to enhance shareholder value. And I think if you look around at companies that operate either in the DataLogiq space, in ad tech and in martech, valuations are high, much higher than ours. Do we know why, and do we have an idea on how to get there? Absolutely. And then on the spin out side, valuations of emerging markets, and certainly Southeast Asia, regionally focused fintech companies, are also equally high. And we do have a plan on getting there. And I think the tide on both of those is certainly in our favor. So we're working hard to deliver on these endeavors. The
future is bright, Brent, and not just because it feels good, but it's hard to argue with the logic. Pardon the pun, I didn't mean to say that. But it's hard to argue with the logic of Logiq and how you guys are planning to grow and unlock value. Love it. Can't wait to have you back. Congrats to you and the whole team, because I know you've got to, one hand, keep operating your core businesses and think about the capital side, the capital market side, how you're going to expand. And that takes a lot of very skilled people. So it's awesome to be watching you guys executing, and can't wait to see how you guys, deliver it in the next few weeks, couple of months. But it looks like there's a lot going to be coming, buddy.
Terrific. Thanks, George.
To everybody at home, you've been watching or you've been listening by podcast on Spotify, Google, Apple, your favorite podcast platform. To Brent Suin, he's president, executive chairman of Logiq Inc., trades on the NEO in Canada under LGIQ, and also for our friends in the US under LGIQ on the OTCQX. For those who are new to the story and you like what you've heard, you want to do some due diligence now, two-step process. First, get over the Logiq profile on AGORACOM, because it's a tech company. It's got two divisions. It's got a lot going on. So we've got a nice, what I call a nice 1,000-foot overview of the company, so you get a good understanding first. Then from there, or you can see it right above Brent, hop over the Logiq website, Logiq with a Q, for everyone who's listening by podcast, logiq.com. Do your deep dive due diligence. If you believe in the future of e-commerce, if you believe in the future of small, medium businesses getting their piece of the pie and growing and competing, then Logiq is the company that you've got to do your due diligence on. Don't tell us we didn't tell you so 12 months from now. Have a great day. See you next time. Hey guys, this video is over, but don't forget to help your company by liking it and then leaving a comment below. And then don't forget to help yourself by subscribing to our channel so you don't ever miss another great AGORACOM small cap video.